All right, Mark. So we're about ready to watch our next episode of SoCo's Most Interesting Podcast after taking a little break. What was some insight that you had, or what's something that you didn't realize that you learned on the podcast today?
Chris, I love talking about the stuff that we're talking about here. It's really current market, what hurdles we're running up against right now, and what are some options involved in finding the right situation for you. What about you?
You know, it was just good to be back, Mark. We took really about 3 months off. I had some personal stuff going on with family, and but we're back and we're kicking butt. And I'll be honest with you, it's the most fun I've had today.
Outstanding. Awesome. All
All
right. Well,
right.
let's take a look at this one.
All right. Sounds good, Mark. Hey, everybody. Welcome to SoCo's Most Interesting Podcast. I'm Chris Bongiorno. And with me, as always, well, I guess maybe not always. We've had a couple where it's just been one of us, Mark Didkoff. How you doing, my friend?
Today is a beautiful day, Chris, and I'm very excited to be back because we took a little bit of a hiatus over the last few months, and I've missed talking with you.
Yeah, it's been, I'll be honest with you, it's been a bit lonely, Mark, not connecting with you as much and not connecting with our audience. You and I were talking the other day. We've both had people reach out to us and be like, hey, when's the next podcast? And that was kind of an ego boost, to be honest with you. It was kind of fun to have people reach out like that.
Yeah, one of our 14 viewers reached out, and so thank you to all 14 of you.
One of our 14,000.
This is for you. That's viewers, what I meant.
14,000.
Yes. Sweet. What are we talking about today?
Mark, I want to talk about something that I've been talking to people about here for about the last 3 months. I've been talking with agents who have called me regarding questions from their prior customers and some friends and family members and past clients. And I think I hate to characterize it as a warning because I don't think it's really a warning, but it's a heads up, somewhere in between those. And what I want to talk about is the impact to a lot, and I mean probably the majority of people's monthly mortgage payments that already have bought a house and have a mortgage. There's two parts to that I want to talk about. As most people know, most people's mortgage payments include not only the principal and interest, but it also includes their property taxes and their homeowner's insurance. And even if you don't have your taxes and homeowner's insurance as part of your monthly mortgage payment, you still have to pay those. Even if you don't have a loan, you have to pay those. And it's important to understand a couple things. The first thing is in our area in central and southern Colorado, and I'm going to assume in most of Colorado, over the last couple of years, we've had a huge increase in property values. Wouldn't you agree, Mark?
Yeah, I mean, starting in about 2018, we started to see a surge. And then during COVID, we saw a 40% increase in property values over a 3-year period, which is realistically unheard of. So yes, property values have skyrocketed over the last 6 years.
And, one of the things that has happened really, I've seen personally a big increase in my assessed property value in the last 2 years. The 2 years before that, little increases. The last 2 years, big increases. And my property taxes went up by about 25% from where they were 2 years ago. So folks, you need to be aware that if your property taxes are part of your monthly mortgage payment, not only will your payment go up by what your property taxes are going up, if your escrow account has a shortage, which it is likely to have, meaning that you have not been paying enough in to cover your new assessment, you may also have your payment go up to cover that shortage. So it could be a double whammy on your property taxes. Mark, have you seen that with your clients? Have people reached out to you in the last couple of months, either wanting your help to dispute an assessed value or asking you questions about assessed values?
Yeah, so last year is when they came out with the new assessed values, and that was your opportunity to petition for those. And so I did help multiple people put through petitions there. Some were accepted, some weren't. It's a tough thing to go through, but some of them are legitimately viable. If you don't like your assessed value now, it's not really anything you can do about it. You just got to wait for the next opportunity to protest those. But like you'd said, your property taxes went up 25%. Chris, I know somebody who had a vacant lot in the southeast section of Pueblo. In total, the lot was 1,700 square feet. That's it. It was a 40-foot by 40-foot parcel.
Oh, okay. Okay.
Tiny. You can't even build on it, right?
Gotcha.
Over the years, the annual taxes on that used to be $30 to $50 a year because it's a dead lot. You can't do anything with it. She just got her new assessed value and her taxes annually became $450.
Wow.
So it almost
Wow.
10 times what she had been normally paying, to the point where she couldn't afford to keep it anymore because she'd
Right.
always held it because, whatever, it's, 30, $40 a year. I'll just pay the taxes on it.
Right.
She got that and said, I'm not going to pay $400 a year to own this. This is ridiculous. It's not worth anything. And she did try and protest it and they denied it. So not just 25% increases. We've seen pretty substantial increases to the point where I think a lot of these people that have been holding these vacant parcels, they might consider selling because it's no longer affordable just to hold them for fun.
Right, right. And then the other thing just to throw out there, it's not necessarily on the topic of property taxes going up because of reassessment as part of a bigger trend. But if you've built a home in the last year and the lender, or if you paid cash for it even, wasn't paying attention and your property taxes were based on the vacant land value, once they reassessed it with the improvements, you're going to see a big increase as well and a big shortage on that escrow account. So that kind of happens all at the same time, Mark, because tax bills go all out at the same time. So everybody is going to pretty much get that notification or has gotten that notification already because tax bills, at least here, have already gone out. And that's going to affect people's affordability. Can they make the payment on their existing home? But also new buyers, it impacts their ability to purchase as well. But the other thing I want to talk about, Mark, is most buyers, and this isn't scientific, this is my opinion, so you agree or disagree with me. I think most buyers purchase between May 1st and October 1st. Would you agree with that?
Yeah, I mean, in our area, there's a seasonality to buyers, and it's very typically the nationwide outside of certain, ski resort towns and that kind of stuff to say the summer is kind of the ground zero of market activity. More people are listing their homes, more people are buying their homes. So I think as a general statement, that's valid.
And you and I both know, but our audience may not know, that every year on your purchase date, your homeowner's policy is going to renew. So every month you're paying 1/12 of your homeowner's insurance premium to your lender. That money goes into an escrow account, and at the end of the year, they make the payment to your insurance company at the time of renewal. So what's going to happen is somebody that closed in, let's say, July, and it doesn't matter when, they just closed in July. They got one notice for their property taxes going up. And now in July, they're likely to get another notice that what, Mark?
Their homeowner's insurance is going up. And it's not going up just a little bit. It's going up a lot.
And Mark, give me an example of what you think a lot is, whether you've actually seen one or it's been yourself or somebody that maybe you didn't even help them out. Maybe they were just complaining about it.
So I just got off the phone with my personal insurance provider who handles all of our rental properties and stuff. And I was having her kind of go through because I know what's going on. And I said, tell me what's going on with all the stuff. And so my homeowner's insurance premium for one of my rental properties is going up $500 from last year. And so to put actual numbers on it, it was around $1,100 before per year. So a little under $100 a month. Now it's going to be around $1,600 per year. And that's not as bad as it gets. I know somebody, theirs doubled, flat out doubled. And
Yes.
that is meaning if you're at $1,200 a year, $100 a month, now you're upping it to $200 a month. That's real buying power for our clients, isn't it, Chris?
Yeah. Yeah. I mean, it's going to make a huge impact in really two scenarios: people that currently own their homes and people that want to buy homes. And we don't usually talk that much about current homeowners in terms of a whole episode, and it's little anecdotal stuff here and there where we throw it in. But today I want people to understand that I have a client, and she is on a fixed income, very well qualified when we did her home loan 3 years ago. She didn't want to live by her mortgage payment. And so she was very conservative when we got her approved in the home she bought. Her property taxes went up by about $110 a month in the last 3 years since she purchased. And she was just notified that her homeowner's insurance is going up again. It's gone up since she's purchased it. And so from when she purchased, her new mortgage payment from when she purchased is going to be $500 a month more. And so I recommended to her that she shop around and see what she could do with her homeowner's insurance. And she's got good coverage with a good broker, and that's really the best she can do. And it's really impacted her life. And so what I want people to understand is get ahead of this. If you bought in June or July or August or sometime and you have not been notified of a change in your homeowner's insurance, get on it, call your agent, see what's coming down the road, prepare for it now. I have another customer, Mark, that reached out to me last week, and they're actually going to sell. They can't afford their home, and they have a very low interest rate, but they've got to scale back because they cannot afford their home with their new homeowner's insurance. And fortunately, they have not taken out a home equity line of credit and used up all their equity in their home. They've got equity and they can afford to sell, pay their agent, pay some seller concessions, and still have money for a down payment. My fear is a lot of people that are in a similar situation where they've got to sell and downsize may not have equity if they've got a home equity line of credit to pay off credit cards, or, just they had to do it because of a job loss or something else. And now they don't have equity and they can't sell.
Well, or what even about the people that have bought within the last 2 years with high LTV, right? High loan to value, the VA
Right.
buyers, the down payment assistance buyers that are typically underwater the day they walk into their home, and their values haven't gone up enough to justify, and their payments have, gone up so much. And so one thing, so we're talking about taxes went up. That goes into your monthly payment. Insurance is now, we had Sam Prohl on last year, right? And he's
Right.
an insurance broker, and he actually did a class for us a little while ago and talked about how we're in the middle of a generational insurance crisis, where normally
Right.
when we go through the purchase process for a buyer, we say, find homeowners insurance. It's not hard. Go ahead and, we'll figure it out by the time we close. Now it's like week one, like you need to lock in homeowners insurance because we need to make sure, one, you can get it, and two, that it's affordable for this property. They're denying properties for roofs that are perfectly functional, not leaking, no issues, but they're
Right.
over 10, 14 years old. And the insurance provider says, nah, get a new roof or find a different house. Right. And so we've got taxes that went up. We've got insurance that is now going up. But think about before all of this. Let's rewind the time all the way back to 2018 to 2020, and then into 2021. Property values went up 40% in that time, right? And then what happened right after 2021? So in 2022, property values stopped increasing at that rate. But what increased instead, Chris?
Interest rates.
And what did they do? They doubled, right? So we had property values go
Yeah.
up 40%. Interest rates functionally doubled. Then last year, taxes doubled for some people. And this
Yeah.
year, homeowners insurance is doubling for some people. So you've literally got all four pieces that go into somebody's monthly payment, and they've all gone up over the last 4 or 5 years extraordinarily, right? Not just like little increases like people expect, but like historical increases in very short periods of time is what we're running into on all four of those aspects.
And wages haven't gone up by 40 or 50%, Mark. And so
Right.
that's where it really impacts affordability. And I think what a lot of people lose sight of is that's part of inflation, right? And I know personally, living with it, as all of us do, groceries are way more expensive now than they were in 2018. And there's so many things that we pay for on a daily basis that are more expensive today that were cheaper in 2018. Most of what we're buying has not increased by 40% or 50%. And housing expense is really one of most people's largest expense every month. I would say for the vast majority of people, that's the big ticket item. So you're not only do you have the little things like the cost of orange juice and milk and the things that you need to really survive, your housing expense is astronomical compared to your wages from just a few years ago. And one of the things that is interesting is that it's such a shock. People hear 7% interest rates, and honestly, a 7% interest rate isn't terrible. And historically, it's still low. But it's from where we were to where we are in combination with these values. And I mean, you and I thought probably last year, maybe the year before, kind of that shock of home values and for our buyers was over and affordability was going to kind of rebound a little bit with the slowdown in the market. I really didn't see this insurance thing coming, not like it has. And I thought property taxes would go up some, but not like they have. How did you see things?
Yeah, I mean, to expect, homeowners insurance, property taxes, they hadn't been increasing them according to, increase in value of homes. So that didn't surprise me when they did it. Insurance kind of came out of the blue because I'm not in the insurance industry. We obviously partner with good insurance agents, but that's not something I'm super well versed and up to date on all the time. But one thing to note too is, a lot of people that have been sitting on the sidelines, they even started sitting on the sidelines before COVID, thinking values were too high. They were waiting for some value crash, right? And then they decided to wait, and then all of a sudden interest rates doubled. And now they're waiting because of interest rates to double. But now property taxes and insurance have gone up since. The only thing that might come down substantially that would make any sort of difference at all would be potentially interest rates could come down, but there's no signs. We did an episode saying that the Fed had come out saying they're expecting multiple drops this year. Chris, we're in May and we haven't seen one yet. Now we're talking about maybe it's not going to happen because the economy is doing well. And so anybody who did buy pre-COVID is sitting in the best position possible, even though all these other things have gone up. If you're sitting now and just trying to get into the market, I mean, you can keep telling yourself, I need to wait, I need to wait, I need to wait. But boy, how's that worked out so far?
Well, and I think what we're going to see, Mark, is, things have slowed down, obviously, and it's because of higher interest rates and taxes and insurance. So the real estate market is slower. But one of the things to keep in mind when the dam breaks, and by the dam, I mean something that is providing resistance in the market right now, when that resistance goes away, we're going to see values go back up. And they're not going to go up 40%, but they're going to start going back up. And that's going to be interest rates. So as interest rates decline and demand increases, we're likely to see prices increase. And I don't expect property taxes to go down, and I don't expect insurance premiums to go down. So in the longer term, and I'll say longer term, 6 months, a year, over the next 5 years, if your expectation is, hey, I'm going to wait for the real estate market crash, I don't know that if there is a decrease in values, that it's going to be something significant where you would be like, oh my gosh, it's amazing. Now's the time to buy. What's going to happen is interest rates may go down from 7 to 5, and that's hypothetical. Don't know when that's going to happen or if it ever happens. But if it does, people are going to say, oh my gosh, let's jump into the market. Now you're going to have multiple offers and values go right back up. Would you agree?
I would agree 100% with that. And so honestly, anybody that's sitting on the sidelines, I preach this every time, right? If you can find something that's comfortable now, go get it, because really any more changes that occur to the market moving forward are only going to be beneficial for those that already own the real estate.
Mark, I just talked with a person the other day, and they're not a client. We were just having a conversation, and they said, "Well, I'm really excited because I heard home prices are plummeting right now in Pueblo." Have you seen that? I've anecdotally, because I'm not a real estate agent, so I it's not my area of expertise, but I would say I've seen some price reductions, but I don't really see a price reduction on a listed home as a huge value decrease of homes. Do you know what I'm trying to say? The
I
distinction
do.
I'm trying to make?
Yeah, because we don't compare what the list price is in regards to home values, right? We compare sold prices. What did finally somebody buy it for?
Right.
And I think year over year, we're maybe down 1%, right? So
Okay.
with a market average of about $300,000 home, we're down $3,000 total.
Right.
That is negligible. In
Right.
regards to monthly payment, it's negligible. I think it equates to like $8 or $9 a month is what people are saving. I hope that you're really, really excited about that, right? And so, no, I think that the 1% decrease in values next month literally might show up as a 1% increase, right? We're
Yeah.
essentially even year over year. So anybody that's under the impression that home values are tanking, maybe certain areas of the market are, right? Typically the highest priced houses have the most volatility to them because they have the most range to swing, right? You could have $1 million home that loses 20% in value. It's still worth $800,000. You
Right.
can't really do the same thing with a $200,000 home, right?
Right.
Because there's too much demand at the lower price points. And so, yeah, that's what we haven't seen much change at all.
Yeah, and so I get nervous for people that are listening to friends and family members about the real estate market because that person got their information from a family member. They're not looking to buy and they own a home, but they're excited for their family members to be able to buy here in the next 6 months because, in their opinion, home prices are plummeting. And I encourage them to reach out to a real estate professional and get some, personalized insight on what's going on in the market and what's best for them. And I think what you say that you say all the time, if you can find something now, you should be buying now. Yeah, I think that's true for 99% of the people out there. But even with that kind of a high number, I still think you should talk to a real estate professional and find out if you're in the 1% or the 99%, right? Because there are some circumstances where you should wait, where it makes sense. And I have a customer right now where it does make sense because they're in school. And when they graduate here in another 45 days, I believe, and they start their job, they can buy a different home because of income increase. So those unique things occur, but realistically, folks, keep in mind if you bought last year, you probably are in much better shape than buying this year. If you bought 3 years ago, you're better shape than buying now. If you're waiting another year, if you're waiting another 2 years, if you're waiting another 3 years to buy, you could be in the same position, with higher interest rates, more expensive things. And like we've said, Mark, talk to somebody and get some real answers for your.
Yeah, and that's exactly what it is. You need to figure out your unique individual situation. Again, we started this episode talking about how everything involved in a monthly payment has gone up over the last few years. The good news is everything's gone up, so there's kind of nothing left. All they could do is increase them even more, which would be unfortunate, I suppose, but it's not like they can throw any other curveballs at us, at least that I see at this point. And
Right.
so, really it is what it is now. And so if you're in the position where you want to be a homeowner, or you're in a position where you are a homeowner, just know that try and fight the waves a little bit. If you can get through, do it. If you feel like you need to liquidate and find something else that's more affordable, there's options out there. You just got to make sure that it's worth the hassle of going through, all the steps that it takes to get you there.
Yeah, absolutely. Mark, what else do you want to cover on this subject today, my friend? Anything else, or did we do a pretty good job on it?
Chris, you did a phenomenal job as always. And so, no, I mean, really it comes down to it, right? If you have a local real estate expert, whether it's a loan officer or a real estate agent, reach out to them, get an idea of where your situation sits. If you don't have somebody, you can reach out to us through the comments or through our direct messages, and we'll get you in touch with somebody in your area to make sure that, again, you're getting the representation and the answers for your questions and not somebody that's going to push you into a situation that's not the best one for you. Chris,
Mark, where can people find you out there on the interweb?
So most major social media platforms, you'll find us at Onyx Home Group. That's Onyx with a Y. And then you can always just reach out to us again, DM or through the comment sections of wherever this video is posted. Chris, what about you?
You know what? The easiest thing, Mark, and I got to fix this. I got to be like you and have some kind of like at whatever, because I'm tired of saying this. Look in the comments and I'll have all my contact info. We got to do something. I got to do something better than that. So we'll figure that out before our next podcast. Mark, thank you very much for your time today and the insight that you gave us. It's good to be back and getting another podcast out, and we'll be back with everybody soon.
Yeah. And if anybody here has anything they'd like us to talk about, definitely reach out and let us know. Also, we appreciate any likes and subscribes on this video because that helps us get the information out there.
All right, guys. We'll see you next time on SoCo's Most Interesting Podcast.